I'm Jessica Hurley with Majesco, and this is Future of Retirement. In this series, I sit down with leaders across pension, retirement, and pension risk transfer to talk about what actually is changing across technology, operations, and the way we serve members. Because the reality is there's a lot happening in this space right now. And at Majesco, we spend a lot of time thinking about what's next, while staying grounded in what organizations need to execute today. So stay with us. You might just find your next now. So let me begin by introducing Ian Cahill from MassMutual Insurance Company. Ian is the head of pension risk transfer for MassMutual and has been in the pension risk transfer industry for more than 10 years. Prior to his current role, Ian was responsible for the pension risk transfer pricing and underwriting teams at MassMutual and has held roles in retail and institutional annuity pricing, annuity purchasing consulting, variable annuity hedging, and financial planning and analysis. Thanks for joining me today, Ian.
Thanks for having me.
Let's start with the big picture. What do you see as the most significant market forces shaping the pension risk transfer business today? And how do you expect that those things will evolve over the next 3 to 5 years?
First and foremost, the change in the retirement landscape has a huge impact on the pension risk transfer industry. So, decades ago, companies focused on traditional defined benefit pension plans as the key retirement offering and really part of their HR and recruiting strategy as an enterprise. Over the last several decades and years, we've seen that shift more towards a defined contribution strategy and less focus on offering defined benefit plans. With that shift, it has left employers that previously offered those plans to still manage the liabilities and the risks associated with those traditional pension plans. So, shifting away from those now creates an incentive for them to unload those traditional pension plans to insurance companies through a pension risk transfer deal such that they can focus on their core business and what they do best and not have to focus as much on managing the pension liabilities. The second trend that really is impacting the pension risk transfer landscape are the asset returns that these plans have experienced over the last several years, being very strong returns and therefore much improved funded status. So that's really allowed them to be in a better financial position to be able to execute these transactions. During that time period, they've also seen rising costs associated with managing pension plans. And that both comes from the administrative costs associated with managing the plan, as well as Pension Benefit Guaranty Corporation or PBGC premiums, which are a requirement for all single employer pension plans to pay. And those costs have risen dramatically. So when you put those two stories together, plans being in a better position to be able to do a PRT and costs making that story a stronger sell on wanting to do a PRT, that's also contributed to the growth in the market. And finally, just a capacity from the market. We've seen more insurers entering the market and more insurers being able to offer solutions to plan sponsors looking to execute a PRT. And therefore, we've also seen more plan sponsors entering the market, and those together have created the higher volumes that you mentioned in the PRT industry overall. When I think about how these trends might shift in the future years, I think we'll continue to see more of the same, and therefore you'll see the growth in the PRT market. I don't think we'll see plan sponsors go back to focusing on managing DB plans, and so I think the incentive will still be there to execute these deals. I think those increasing costs will also be there, further giving an incentive to execute a pension risk transfer. And finally, I think the capacity will be there. I think both plan sponsors and insurers are aligned in looking to execute more of these transactions.
Do you find the complexity of the deals increasing as well?
The complexity definitely has increased, and in particular, as we've seen more plans that are in a position to fully terminate their pension plan, there's a lot more complexity with executing that sort of transaction. And then ultimately, on the administrative side, a lot more complexity in the insurance company being able to take over that administration. So you do see that increasing complexity, which is really one of the reasons that that growing capacity in the insurance market is important because there's a broader set of companies that are prepared to be able to execute these transactions, which is important given the capacity it takes.
Great. Well, that is a great setup. So, building on that, what would you say are the top issues or opportunities facing carriers in this space?
Sure. The first one that comes to mind would just be the general awareness of insurance companies when it overlaps with the retirement and pension industry. So, certainly, pension participants traditionally are used to receiving this payment from their pension plan. They and their former employers may be more familiar with the federal oversight system of the pension side, whereas they're less familiar with insurance companies and maybe less familiar with the state insurance regulatory framework. And so, one of the opportunities I think that comes out of that as an industry is to better educate on really the strength of insurance companies, the strength of the regulatory framework that surrounds it, and ultimately that the risks associated and the administrative complexities that go with these sorts of liabilities are the things that insurance companies focus on and do best. The second is really just volatility in the market. So, as I mentioned before, the strong asset returns we've seen over time has contributed to the growth in the PRT market. So, therefore, if you see volatility in those financial markets, that may impact plan sponsors' ability to do a transaction. So, when you see volatility there, paired with the resources required to execute these transactions, it's typically needed for the HR and benefits area, as well as the corporate finance areas of these companies to execute the transaction. If there's volatility in the market, they may have other things on their minds and they may be focused elsewhere. So that volatility can impact their ability to come to market. So, what I think that creates as an opportunity is really for plan sponsors to work with their consultants and intermediaries to have a long term risk management plan associated with what they would look to do so that they're ready to execute when they're in that position and not kind of, you know, changing mind at different points in time, but really it's a long term plan and it really is a journey as they go through it.
That's actually a perfect segue to my next question, which gets to how PRT providers differentiate themselves. So, what, in your view, differentiates a successful PRT provider in today's market? Pricing, servicing, speed, scale, what rises to the top?
I think those aspects are certainly key for plan sponsors that are looking to select an insurance company in a PRT deal. But I think there are a couple others as well. Experience in the PRT market comes to mind as certainly an important differentiating factor. For MassMutual, we've been in the market for over 40 years at this point, and so therefore have a lot of experience managing different pension risk transfer deals with different plans, having over 650 contracts. So being able to leverage that experience to deliver to for new clients, I think is very important and is a differentiator in the market. The other would be alignment. When we think about the interest between the plan participants that are part of a pension risk transfer deal, the client that is ultimately selecting the insurance company, and the ownership structure of the insurance company. And so when we think about that alignment and think about our structure as a mutual life insurance company, we see a very strong alignment there. Being a mutual life insurance company, our owners most important goal is the long-term success of our organization and the long-term sustainability of it. So when you think about that compared to pension risk transfer, that is in alignment with the long-term viability of the insurance company you select to provide those pension payments for decades to come.
So, branding is important, huh?
Um, Absolutely, and really just understanding the true structure of the organization, and again, the experience that they have in PRT, that they've been there and have done it before, and have seen many different flavors of pension risk transfer.
Interesting. Great. Well, let's talk about the technology then that enables this to happen, because clearly there's been an evolution on that side of things. How is MassMutual using technology to improve the execution of the PRT deals? And are you starting to leverage AI in the process?
You mentioned earlier the complexity that's associated with PRT deals in the market today, and I think that really highlights the importance of a strong administrative capabilities in this market. And with that comes the technology that you use to administer the business. So we certainly see the value and see the importance of having a very strong admin platform within our organization to be able to administer the plans that we have brought on. And continue to leverage that as an important part of our value proposition in the PRT market. Of course, any conversation today without AI would be a very unique conversation. So, to your point, when we think about the application of AI, that it comes out of first and foremost having years of experience working with other things like machine learning and those sorts of elements that when we approach AI, we do it from a responsible and certainly a measured way within our business. And so starting first and foremost with what opportunities are there for our back office capabilities that AI can make us more efficient and drive improvements within our processes. So we see that in a couple different facets. Certainly just from a productivity standpoint. And when we think about managing the different things on the day to day that you do, whether it be emails and documents and those sorts of things, and leveraging AI to be more efficient there. But we also, within the PRT business, see opportunities in terms of the number of transactions that come to market. You mentioned close to 800 transactions last year that were executed. So when we're receiving the request for proposals from consultants that are looking for the insurers that are looking to bid on their transactions, we see an opportunity to leverage AI in evaluating those opportunities and really selecting the transactions that we'll look to participate in. We also see the capabilities allowing us to support our proposal and our contracting process, where we deliver highly customized solutions to our clients. But there's certainly a lot of overlap as well. So trying to drive those efficiencies and being able to leverage it to ultimately make us more efficient as an organization.
Well, that's terrific. So as we wrap up, what's MassMutual doing in the future? Where are you heading strategically in this space?
Yeah, when I think about our forward-looking objectives, I think they're very centered around one key theme, which is really looking to meet client needs in a rapidly growing market. So whether that be looking to continue to enhance a seamless installation process and making it more smooth for clients as they look to move over plans in a pension risk transfer, scaling our admin capabilities to be able to service a larger block of annuitants as we look to grow and going forward. And finally, being able to meet the needs of clients in terms of how we structure transactions. And so thinking about the different product offerings and being able to meet truly what their needs are through executing a pension risk transfer. Those are the different things that we're looking at as we go forward in our pension risk transfer business.
That's a great place to end our conversation.
Ian, thanks for joining us today, and thank you all for joining us on Future of Retirement. If you found this conversation valuable, be sure to follow the series, and for more insights, visit majesco.com. Thank you.